Welcome to the Money and Markets podcast with me, your host, Kudzanai Sharara. On the Money and Markets podcast, we talk about all things investments. We also have another segment where we talk about financial literacy. But today we are focusing on the investment side, where we are looking at the Zimbabwe Stock Exchange, how it performed in 2024, and also looking at the 2025 outlook. And today I'm joined by Wafa Kuchera. Wafa is a retail investor on both the Zimbabwe Stock Exchange as well as the Victoria Falls Stock Exchange. And Wafa, welcome to the Money and Markets podcast.
Thank you, Kudzi. Thank you for having me.
Thank you. Now, let's get straight into it. Just looking at 2024, it was a year full of unique challenges for Zimbabwe. We are talking about high inflation levels, which peaked at about just above 37%. We are also talking about significant currency depreciation when it was still the Zimbabwean dollar, as well as when it became the local currency became Zimbabwe gold. How did these conditions influence your investment strategies on the Zimbabwe Stock Exchange?
All right. So moving from 2023, we just had an election, and by that time we kind of knew that we were going to have a drought year for 2024. We also knew we would get a new governor. And then we also knew of all the other things that were going to come along, like the SADC summit and all the infrastructure that that government wanted to implement, to build out. So those challenges, when they came, they were expected. We expected inflation to go up because we knew government would be spending money on the SADC summit and on infrastructure. And we also knew they would be spending money on drought to support both the economy and the families that would be affected. So I guess the strategy then changed to one where you would where instead of looking for quick gains, you would hold for longer.
Okay, so would you say, in terms of your investment goals, were you focused on capital preservation, or you were still expecting some capital gains?
So when I invest, I think the capital growth and the income from the investments are implied in the very decision to invest. Yes. So the primary focus was on capital preservation. You didn't want to use capital to lose capital because of changes, say to the RBZ governor and to the monetary policy, as it were. So capital preservation was the primary goal. Capital growth and income, those are implied. So the very decision to invest implies that you're looking for growth and you're looking for income.
But looking at those, you're talking about capital preservations. What were you focused more on? Because the Zimbabwe Stock Exchange, we've got ordinary shares. We also have exchange traded funds, as well as retail investment trust, real estate investment trust. They raise. Where was your focus on?
So primary focus, especially when it comes to the stock exchange, the primary focus is on the equities, simply because there are just more of them. Yeah, but during the year, in fact, towards the end of 2023 into 2020, getting into 2024, we actually started investing in ETFs quite a bit. So equities is the primary focus, but ETFs also proved to be of interest. I think during the year.
You can go ahead.
So during the year, the REITs came up. I think there was a listing for Revitas, the NRZ pension fund REIT. So that also came in, but it's not a focus. It's only one of two. So there's very little that's happening on the REITs at the moment.
Yeah. So given that your focus was more on stocks, were there any specific sectors where you think that you thought were going to do well?
So the ETFs, maybe as a sector, we thought they would do well. If they were not going to do well, we thought the changes that were happening, the migrations between the ZSE and the VFEX, and the increase in dividend declarations would actually boost the ETFs. So if you look at the composition of the ETFs, most of them will receive dividends and would benefit from any migrations that would have happened. But we're also focused on manufacturers and utility type companies. So companies that provide food, electricity, or maybe not provide electricity as such, but utility type or utility associated companies. So heavy manufacturing, utility associated companies, and ETFs. And I think I should mention that we also try to avoid banks. So we deliberately tried to avoid banks. We were not sure about the change in Reserve Bank governor. The last time there was a change in Reserve Bank governor, it was from Dr. Gono to Dr. John Manguja, and that was a smooth transition. There was very little that happened there. With this change, we're not sure, because it seemed like government, on its own part, wanted to be more aggressive in terms of monetary policy. But it seems like there's a bit of continuity there. And then the previous change to Dr. Gono from Dr.
Before that? Before Dr. Gono? Okay.
Yeah. So when Dr. Gono came in as Reserve Bank governor, there was a lot of upheaval there. So this time we just deliberately avoided banks. So yeah, whatever we had, we held. And anything that we felt had moved, we sold. Yeah.
All right. So now, 2021, 2022, we saw a significant increase from retail investors joining platforms such as ZSE Direct, also VFX Direct later on. But 2023, 2024, it seems like there was a significant slowdown as well from retail investors. What would you attribute that slowdown in retail investor participation on our markets?
All right. So in the previous periods, take 2021 into 2022. That's when the Old Mutual ETF listed, and by its nature, it attracted a lot of retail investors. So a lot of retail investors actually signed up to participate in that Old Mutual ETF. In 2022, there were I think two other ETFs
yes,
list.
that came through. That first one,
Yeah.
the Morgan and Co one.
Yeah. So I think that activity, that IPO or that listing activity, attracts retail investors. It's something where they can participate at the point of entry, and it generates its own publicity and the like, and retail investors get attracted to it. So looking at 2023, 2024, there were very few listings. There were a number of migrations, and there were a number of companies that just failed to perform. Truworths, for example, was put under under reconstruction. Kaya was put under reconstruction recently. So things like that tend to scare away retail investors. You know, the fact that highlighting the losses that can happen, it just scares away retail investors, and even some institutional investors, and I think also get scared away by such activity.
So if we are to, you can go ahead. Yeah.
More listings and more corporate actions attract retail investors.
Oh, okay. So if we are to bring in more retail investors, there is that need to get more listings and more, obviously, exchange traded funds, which have got a low entry point. And so I think I do agree with you. What about the platforms themselves, ZSE Direct and VFX Direct? Do you think there's anything that needs to be done for them to be to get more participants, or in terms of the platform themselves, or maybe the marketing or educational aspect of those platforms? Do you think enough is being done?
I think the ZSE is doing a good job. I think they have limitations in what they can actually do. But always more can always be done. I think the fact that you have two systems already is a challenge for retail investors. When I invest on the stock market, or when I started investing on the stock market, it was still ZSE, and then at some point it split into ZSE and VFEX. Obviously, there are technical reasons for that, but in terms of trading, I don't think there's I don't think there are serious technical issues that require the platform to be differentiated.
Separate. Okay. So there is need for a consolidated one, which has got a window for ZSE and another window for VFX.
I think that would just make it easier for retail investors to access the market. Just by one registration, by one process, they can access the two markets. It's an easier way to access those markets than having two separate registrations.
And just coming back to investments, what key lessons have you learned from your investment experience in 2024 that you would share with other retail investors in Zimbabwe? Maybe not only restricting to 2024, but in your investment journey, what lessons would you say maybe retail investors should take note of?
Maybe all right. So I've been investing for on the stock market for a while. So I do have a lot of lessons. Some of them are now ingrained in terms of something happened, I learned my lesson, and it became ingrained in how I analyze the market, how I assess risks, and so on. But maybe what I would say for new investors onto the market, the first thing is understand what you are investing in. Just take time to learn what the stock market does, to learn what you're investing in. So if you're buying, say for example, Delta shares, or if you're buying into an ETF, just take the time to learn and understand what those things are, what the risks are, what the opportunities are, what the business cycles are, so that you are not in shock when something happens.
I always
And
say that the biggest investment you can make before you invest in the stock market is to invest in knowledge. And we as the Money and Markets podcast, we provide such platforms which are educational. And also the ZSE itself has got a website, www.ZSE training, where they offer also some modules that you can investors can take advantage of to get an understanding of how the market works. Now, going into 2025, looking ahead, Wafa, what are your expectations going into 2025? Do you think it's a year that the market might turn, or we are likely to have this bearish trend for longer?
I think 2025 is actually going to be a great year. And this is based on coming from a very low base in 2024. I mean, the market or the economy didn't perform as well. So 2025 is going to be a correction of that. And maybe just to add onto that onto that line of thought, what we saw in 2023 was the introduction of a new. In 2024 was the coming in of a new governor. It was the end of in terms of policy. It was the end of the NDS1 program. In 2025, we are starting on NDS2. So in terms of all the policy mistakes that were happening previously, government will try to correct them, and in correcting them, the hope is they will make better decisions, which will support the economy and the companies that are listed. But the one thing that we believe we need to keep an eye on is the continental free trade area. What happens there is we are opening that continental free trade area is opening up opportunities for Zimbabwean companies to trade with the rest of Africa. But at the same time, we are also being opened up to competition from the rest of Africa coming into Zim to trade with us. So that's there are dynamics there that we need to keep an eye out for. And then I think the other thing maybe that we are also looking at is ETFs. So in 2024, Old Mutual top 10 ETF decided to
delist, yes,
because the composition of the ETF had changed following the migration of some counters onto the VFEX. So they decided to delist, which was it kind of threw us off from our initial investment strategy. But what we believe is we need to reassess what or how the ETFs operate, especially when they come to the end of life, so that so that we can kind of maybe take better decisions on the ETFs. But also, I think the regulators also need to really look at that. because it's very possible for some of these ETFs that are currently listed to also decide to delist or to rearrange themselves.
Well, that was all we have for you today on the Money and Markets podcast with me, Kudzanai Sharara, and my guest today, retail investor on Zimbabwe Stock Exchange and the VFX, Wafa Kuchera. Wafa, thank you so much for taking your time to be with us on the Money and Markets podcast.
Thank you, Kudz. Thank you very much.